Hello, this is Kirill from forexboat.com and welcome back to the course on money management. In today's tutorial, we will be talking about the core concept behind the Larry Williams money management method. To start off with, let's draw a horizontal axis. And this axis will represent time. Now the vertical axis will represent the balance on our account. As we discussed in the previous section of the course, if we apply a constant lot money management system to our trading, then our balance will experience linear growth. So the balance line will look something like this. Now, the main goal of the Larry Williams money management method is to convert this linear growth of our balance into exponential growth. And the best part is that the Larry Williams money management method does this without affecting your trading strategy at all. So you would be entering in the same times and at the same signals. You'd be exiting the market also at the same signals as you would be without the Larry Williams money management method. So you'd be doing exactly the same things, and just by adjusting the volumes of your transactions using the techniques that Larry Williams presents us with, you would be able to convert linear growth into exponential growth. And that's exactly how both Larry Williams and his daughter Michelle were able to win those contests and achieve growth of 10,900% per annum, or 900% per annum. And by the way, I didn't mention this in the previous tutorial, but those they were trading with real money. So that wasn't just $10,000 of demo money. That was real American dollars that they converted into $1 million or $100,000 in Michelle's case. So let's see how all of this works. Now this is the chart that we're familiar with from the previous section when we talked about the constant lot money management method. Let's construct a similar chart, but for the Larry Williams money management method. Let's start off by assuming that we have $1,000 on our account, which is represented by this blue block in the bottom left corner. Now, let's also assume, for argument's sake, that we choose to invest one lot. So every time we have $1,000 on our account, we consider it a good situation, or consider it a good risk-taking opportunity to invest one lot into our next transaction. And let's also assume that if our transaction is successful, then that one lot brings us another $1,000. So in this case, you can see that we invested one lot, we earned another $1,000, and now we have $2,000 in our account. So what the linear money management method, or the constant lot method, would say now is that for our next transaction, we also want to invest one lot. And basically that means that our thinking hasn't changed at all. So we're completely ignoring the green block, the profit that we've earned, and we're just saying, okay, let's do the same thing as we did before, and our mindset is only looking at this blue part of our balance, so our initial starting balance. Now, we want to change that. Let's, instead of looking at only our starting balance, let's look at the whole balance that we have on our account now. Now we have $2,000 in our account, and the Larry Williams method says that since your balance has grown twice, then your risks should grow proportionately, and therefore your volume of transaction should also grow proportionately. So if when you had $1,000 you invested one lot, now that you have $2,000 you should invest two lots. And let's do exactly that. And now we know that if we invest one lot and our transaction is profitable, we earn $1,000. Because we invested two lots, if our transaction is profitable, we're going to earn $2,000. So an additional two green blocks on top of what we already have. Now let's move on and do this one more time. If we're using the linear money management method, then our thinking still hasn't changed, and we would be only looking at the balance that we originally had. So our mindset would be the same as it was at the very start, and we would again choose to invest one lot. However, now that we're using the Larry Williams approach, we know that we have $4,000 in our account, so our risks and volume should also grow proportionately. Because when we had one lot, we invested, when we had $1,000 in our account, we invested one lot. Now that we have $4,000 in our account, we should invest 4 lots. And 4 lots, if the transaction is successful, will bring us an additional $4,000, which we'll put on top of what we already have, and we'll get something like that. And let's do this one more time. Now that we have $8,000 in our account, we should be investing 8 lots into our next transaction, which, if it's profitable, will bring us $8,000 of profit. And our balance will keep growing just like that, up, up, and up. And as you can see, this is exponential growth. So $1,000, $2,000, $4,000, $8,000, $16,000, and so on. That is exactly exponential growth. And that's how you convert your strategy from bringing you a linear growth in your balance to an exponential growth in your balance. So that's all for today. And even though the concept that we discussed may seem very basic, they allowed us to lay some very good foundation for the rest of the section in this course. And next time we'll talk about the Larry Williams money management formula, which allows us to achieve all of this. And I look forward to seeing you then. Until next time, happy trading.